Good morning, everyone, and thank you for joining us today. On behalf of NH3 Clean Energy, I'd like to welcome you to this investor webinar following yesterday's announcement regarding the selection of Linde Engineering to deliver feed for the WAH2 project. Today's session is in listen mode only. If you have a question at any point, please type it into the chat box and we'll address it during the Q&A at the end of the presentation. Presenting today are Chairman Charles Whitfield and CEO Stephen Hall, who will provide an overview of the announcement and discuss the next steps for the WAH2 Clean Ammonia project. I'll now hand over to Charles and Stephen to run through the presentation.
Great. Thank you very much, Simon. My name's Charles Whitfield, Chairman of NH3 Clean Energy. Thank you everyone for joining this webinar, which is to provide an update on the work streams to FID and also walk through the significant announcement yesterday and its ramifications. Before that, we're delighted that there are a large number of new investors on the call. So as well as welcome them, I wanted to spend a moment to put the project into context. The WAH2 project is the most advanced and preeminent clean ammonia project in Australia and the leading blue ammonia project in the entire Asia Pacific region. That might sound like hyperbole, but I want to encourage you all to do your own research to ascertain the validity of that claim. Our position is certainly recognized in the industry, and that is why we've managed to assemble the gold standard of project partners from suppliers, technology providers, customers, and strategics. The latest, of course, of these being Linde. We have worked with them for over 6 months, during which time they have been building their understanding of the project, and we have been building our understanding of their capabilities. And so off the back of that, we're delighted to now be engaged with them to work on the delivery of the WAH2 project. And with that said, I'll hand over to company CEO Stephen Hall.
Thank you, Charles, and hello, everybody, particularly for anybody that I haven't addressed previously. Part of our strategy has always been to de-risk project delivery by getting the best people to do the job, and that's what you saw on the previous slide. And this is really a continuation of that. Collaboration with Linde provides us access to world-class engineering, project delivery, and operations experience, and opportunities for capital and risk reduction. And we'll talk a little bit about those as we move through the slides. But just to be a bit more specific, the reason we've selected Linde, well, they're a global industrial gases and engineering company. Importantly, they have a track record for participating in the development of clean hydrogen and ammonia projects, and that's globally. In parallel to Linde doing all of that hard work on the engineering, we will be collaborating with them to develop build, own, operate solutions for parts of the project. We will be maturing plans for EPC, or engineering, procurement, and construction delivery of project elements that are not included in the BOO above. And also, we're going to explore opportunities for Linde to provide operations and maintenance, or O&M, services for any project elements that aren't covered by the BOO solutions. And what that really means for us is world-class engineering, and any BOO or O&M solutions offer us the opportunity to reduce NH3's capital requirements and, importantly, reduce our exposure to construction risk and, of course, access the operating experience that I've alluded to earlier. Now, I appreciate that some of you may not be familiar with Linde, and so I'll just spend a moment sort of introducing you, as it were. They're a leading global industrial gases and engineering company, truly multinational. Their market capitalization is north of $200 billion US. Their primary business is manufacturing and distribution of gases, oxygen, nitrogen, processed gases, etc., and importantly, hydrogen and ammonia. They're actually listed on the NASDAQ in the US. They're a member of the S&P 100, and they've got operations in more than 80 countries. Particularly relevant for us, of course, is that they participate in over 150 hydrogen plants across the world. And as I'm sure you remember, hydrogen is really an integral part of our project. So we make hydrogen and then we turn it into ammonia. So extremely relevant experience. And they know the Asia Pacific very well and have a long and deep involvement in the region. As a group, Linde Group reported 2025 sales of 34 billion US, so an extremely substantial company. In terms of Linde's involvement in the hydrogen and ammonia sector, they've been involved or are involved in some of the leading projects globally, and they have relevant experience in the Pilbara. And I'll just spend a moment talking through these few examples, and these are all announcements that have been made. So Linde have invested 1.8 billion US, that is, to supply clean hydrogen to the OCI Woodside ammonia project in the Gulf Coast. Now, I should say that's now called Beaumont New Ammonia. Now that construction has been completed and operations handed over to Woodside for the back end of the project. Linde's role here was to build, own, and operate a complex of on-site, which included autothermal reforming, carbon capture, and a large air separation unit. The air separation unit is where you take the atmosphere and you effectively split it into oxygen and nitrogen, which are key ingredients for what we're trying to do. Linde are also involved in the Perdaman project. The Perdaman project is a large urea plant being built about 30 kilometers, 25 kilometers maybe, north of where our plant is going to be. So extremely relevant experience and timely. It's still in construction now. And in that project, Linde are providing the air separation unit and also a nitrogen wash unit for that project. Again, key pieces of the infrastructure. And then the third example is Linde's signing a long-term agreement to supply industrial gases to the Blue Point facility in the Gulf Coast. That's the facility that's jointly owned by CF Industries, JERA, and Mitsui. And again, Linde are going to be owning and operating an ASU for that project. And I guess the key takeaway from this slide is what we're looking to do at WAH2 is not unusual. It's a path that's been successfully proven elsewhere. And to pick some of those things, I mean, each of these plants use Topsoe technology as their core technology for hydrogen production. As you know, that's what we're doing. Each of these has been developed by a consortia. And if you look at these projects worldwide, there's often different ownerships of different parts of the company, of the project. And the reason for that is that it lets the different participants each play to their strengths, and it avoids issues like potentially equipment providers competing with their customers or treading on the toes of their customers. If we now turn to WAH2, this schematic shows effectively the different building blocks of our project. And the color coding is showing you the different ways that we're considering executing the project. So on the left-hand side and down at the bottom, you can see two boxes with red outlines. They're owned by third parties. So our gas supply coming from Chevron, our CO2 sequestration, they are completely third-party owned. You can also see some boxes in blue, the ammonia synthesis and the at-port storage, that would be owned by NH3 and the project. The green boxes are the multi-user infrastructure or potential multi-user infrastructure. So we've already announced the AGIG CO2 pipeline. We're looking also at the ammonia pipeline, and as you know, there are multi-user facilities at the port of Dampier. That then takes us to the sort of yellow or orange color. Those are the key areas that we are exploring BOO for. Together, they can make up a significant part of the overall capex, potentially up to 50%. Charles, I might hand over to you at this point.
Yeah, thanks very much. Just while we're on this slide, I just wanted to also draw attention to that chain dotted blue line, which is what would be covered by an O&M, an operations and maintenance agreement. So that shows how you can combine both BOO and O&M contracts within the plant. So obviously having continuity across the operation of the plant is also very useful, which brings us nicely onto the next slide. So we've put this schematic together to help illustrate our thought process. Really, we're focused on two main things in terms of the delivery of this project. Number one is risk mitigation. Number two is maximizing attributable value to shareholders. And so when we're considering the three elements of project delivery, which are essentially construction, operation, and financing, you see the interplay here of those three components and what they mean in terms of the form of contract that you end up entering into. So for pure construction and project delivery, you would have an EPC. If you combine that with operations, you would have a B&O contract, and obviously pure operations is O&M. The reason why you would favor a build and operate outcome is essentially the continuity between the construction, the commissioning, and the operation of the plant. All in the hands of one experienced party means that there's less room for issues around interfacing between those components of project delivery. Then you have the consideration of the financing component. Obviously, if the financing is provided by the build and operator, it becomes a build-own operation. The advantage of this, as Steve says, means that it's a reduction in your capex for that component of the project. It also helps from a risk sharing point of view that your constructor and operator has skin in the game. The reason why you might not do that, or you might have a bit of a hybrid structure, is because if you can access cheap financing, your weighted average cost of capital may be less than the hurdle rate that the B&O operator is used to. Given that we are actually in discussions with a number of policy-led financing groups which have relatively cheap financing, this is one of the live conversations at the moment in terms of where that balance is optimized. If we move on to the next slide, what we're trying to do here is show the pathway to production and the stages in that pathway and what the impact of having a partner of the standard of Linde means for the project. So from an engineering perspective, having a group who have been involved with equipment supply and engineering and delivery of multiple projects around the globe means that there is a very high standard of accuracy around engineering and design. And that not only helps with obviously project execution, but that indeed gives comfort to other project partners, be they customers or in the finance world. Similarly, with project delivery, as I've just mentioned, having continuity between design, execution, or commissioning and operations is very valuable. And the experience that Steve highlighted, where Linde are involved in the Perdaman project, brings to bear very current operational experience in the Pilbara region, which is extremely valuable. As mentioned, with BOO, if you go the BOO route, that has an immediate reduction effect on the amount of capex, which is attributable to NH3, but it also, like I say, demonstrates some risk sharing, which again gives our other financiers comfort in terms of their overall exposure. And then finally, whether it's under a build, own, operate or an O&M contract, you get to benefit from not only considerable operational experience, but also economies of scale. A lot of plants can be run remotely from a centralized hub, and therefore you're actually making considerable operational savings going that route. So looking forward, I guess one thing which we constantly get asked about is valuation and the share price. What we've got on this chart here is the milestones that have been delivered over the last year, and many of them very, very significant in terms of de-risking the project. It has been, to be brutally honest, a little frustrating that the amount of progress in the project hasn't fully been recognized in the share price. Obviously, we had that run up to 14.5 cents, which started to recognize some of the value. Since then, some very important announcements have been made, not least being included in the WA government's lead agency framework, which is significant for de-risking our approvals pipeline. And also the Itochu MOU, which not only spoke for half of our phase one production, but also opened up the rest of the Asia Pacific bunkering market for us beyond the Pilbara and contemplates project level equity. So a very significant announcement, which just obviously hasn't been fully understood or got the traction which it should have. Since then, we've been progressing the environmental studies. Obviously now the engineering agreement with Linde. So we're looking forward to getting more traction in terms of the revaluation of the company going forward. Moving on to the next slide, I think Steve and I will share this one, but what we wanted to demonstrate was the increasing tempo of announcements and milestones which are being achieved. So we've got three columns here. First of all, the announcements which were made pre-October of last year, and then what's been made subsequent to October. And then we have what's in the pipeline for the next 6 months. That's actually probably more like the next 4 months. But the key milestones that investors should look out for on that, significant progress and announcements around financing as we clarify the parties that we're talking to and the form of financing that we have around the table at the moment. The emissions guarantee of origin scheme is key in terms of our customer dialogues. The guarantee of origin scheme, for those of you who don't know, is actually an Australian federal government scheme which essentially transfers the risk of the carbon profile for your production to the Australian government. So they effectively guarantee the sequestration of any CO2 and the audit of your emissions profile. Steve, do you want to talk about the next couple?
Yeah, sure. Actually, just to draw out a couple of things in here, and in terms of, we've talked about Linde, but in the middle column, we've got the definitive water supply agreement. The significance of that is we basically have the preliminary agreements that we need for the project. And as we move through FEED towards FID, we convert those into the definitive binding agreements that will be sufficient to support FID. And basically, the first cab off the rank, if you like, the first one of those is the water supply agreement. Clearly, water supply a critical part um, of the project, and it's extremely gratifying to have that locked away and to have such a strong environmental solution. Effectively, there we're upgrading some existing facilities which allow recycled water that would otherwise go to waste to be used for our purposes. So it's a really strong outcome that benefits all stakeholders. We've been really busy of late on the approval side, and as you've seen, sort of announcements about with flora survey, fauna survey, and so forth. The situation there, and this is embedded in some of our reporting, but we now have flora and fauna surveys over our SIA site. The fauna survey, there are no triggers for higher environmental scrutiny. We expect the same for flora on the basis of the preliminary results. We also have interpreted flora and fauna over the entire infrastructure corridor that connects our site to the Port of Dampier. And again, there are no triggers for a higher level of assessment. So, none of these things is enormous in its own right, but they're all important de-risking events, and they all sort of add weight to the path forward. And was there other stuff you wanted me to talk to on here, Charles?
No, I mean, I'll just go back to the forthcoming attractions, if you will.
Yeah.
Obviously, moving on from Steve's point about taking MOUs and preliminary agreements into binding forms, both on the bunker demand and the power cogeneration side. You should be looking to see more news flow around that. And then Steve's covered off environmental approvals. As the project moves forward, we are constantly enhancing the team, readying ourselves for execution and operation. The final thing is state and federal government support. That comes in a number of different forms. Obviously, we've already highlighted the lead agency framework approval, which is at a state level. We also have some pending federal support that we're working through. Added to which, as Steve pointed out on that page, looking at the different component parts of the project, there are certain parts which are multi-user infrastructure, and therefore there is likely to be some form of state participation in those parts of the project also.
And since we had lead agency support announced October, I think it was last year, I would just like to acknowledge that we really appreciate the support that we are getting from the state government and the collaborative way that we're working with quite a large number of government departments.
So in the run-up to FID, which is getting very close, there are four sort of work streams. I mean, we often combine financing and commercial into one, but they're sort of significant in their own rights. So obviously, project delivery and engineering. The Linde announcement is a major step forward in that, and that's progressing apace. Financing, we are well embedded with all the parties that we want to be talking to on the financing side. And as those gain formality, we look forward to being able to make announcements around that. Steve's already talked about commercial. Essentially, we have agreements in place with everybody that we need. Those are in the process of getting to formalization and a binding form ready for FID. And then Steve also has covered off the approvals pathway as well. And I'd reiterate our appreciation of the level of support that we're getting from the state government in moving through that process relatively seamlessly.
I mean, this is sort of deliberately quite a high level slide, but the point of it is to show that it's extremely clear to us what we need to have to support FID. And we have a very clear plan in each of these work streams, and it's of course integrated across the work streams to get to that point.
Hopefully that provides a reasonable update. I'm sure that there are lots of questions, and Simon, if you have those,
Yep.
please fire away.
I do, Charles. There's actually I had quite a few beforehand, and there's already been quite a few come through. But
Okay.
I'll just remind everyone to, if they've got questions, to submit them in the chat box, and I'll endeavour to get to them all. But as I said, there's been quite a few already. First one: when do you expect to be in a position to determine the preferred delivery model with Linde, whether it be EPC, BOO, or O&M, while keeping the FID timeline on track?
Do you want-
So, I mean, obviously that is defined at FID. However, there's an iterative process between the financing conversations that are going on and our engagement with our delivery partners. So, we will probably get a more clear idea by Q3, and then obviously everything gets formalized, ready for FID.
Maybe just to jump in there, I mean, one way to think about it is you don't really have all the information you need to know which is the optimal solution till you're really in the close lead up to FID. So it's in our the sensible way to progress is to keep the options open as we better define them and try and make them each look as good as they could. And then of course we pick the path that offers the best outcomes.
All right, I'm going to try and put in two here. So, do you think having Linde on board will ease the pathway for financing by giving potential financiers more comfort regarding execution ability? And how comfortable are you with the potential financing path as it stands? And Ian online has also just said, how close are we to a definitive funding pathway? I feel like we probably could answer that all together.
Um, yeah, okay. So, I mean, some of that's been answered or already in terms of the definitive funding pathway is what sort out at FID, because at that point the relative cost of BOO, debt, equity, mezzanine, so on and so forth. And so it's only during that last bit of circularity that you come up with your defined overall consortia. Um, in terms of Linde bringing comfort to financiers, absolutely. I mean, they are top notch. They are, I can't think of anybody who would rather have on board, and I think that that's widely recognised amongst our financing partners in terms of their quality. So yes, absolutely, that provides a large underwriting of the project execution.
All right. Next one. How long have you been engaged with Linde, and what level of due diligence have they done to determine they want to come on board to deliver feed and potentially become a BOO partner?
Well, as I mentioned, we've been engaged with them for more than 6 months, and we've had a very, very free flow of information between the parties during that time.
All right. Another one here. What positive learnings, workforce, construction, or timing benefits could flow from the nearby Perdaman urea project to the execution of the WH2 project for NH3?
Well, there's a lot. It's a short answer, but I mean to try and give you a bit more detail than that. There's some things that have worked really well. Modularization. There's now a really deep understanding of bringing large modules into the port of Dampier, which is where the Perdaman modules were brought in and where our modules will be brought in. Without going into sort of confidential material, there's a lot of stuff that's happened really well on the Perdaman project, and that stuff, of course, you want to piggyback. As with any project, if you look back with hindsight, there are things that you would do different if you had your time again. And so the fact that Linde and others that we're working with have got that direct experience, whether it's Topsoe, whether it's Linde, whether it's others, they're basically there's so much commonality. It's exactly the same climatic environment. It's exactly the same workforce availability. So it really is a priceless analog, I suppose.
And I just want to enlarge on Steve's point about modularization of the plant. The size of the modules, I think unless you've been to one of these projects, it's hard to imagine. You're looking at 12, 13-story tall, size of a football pitch, prefabricated components of the project, which arrive on barges and are then on dollies, remote dollies to drive them to site. They're huge components that you're plugging together. So things like having a large area at your site to be able to have delivery of the modules well in advance of when they're required to be put into situ, helps with sequencing and overcomes possible delays and so on and so forth. So all of those things are considerations that are maybe not obvious until you've actually done the build of one of these projects.
There's also the timing element in terms of skilled workforce and so forth. So Perdaman is, I think their latest number is 80% complete. So it's, they've got the finish line kind of on the horizon, as it were. And of course, we're approaching FID, and that is a very beneficial timing.
All right, I had one right at the start here. The Australian government is implementing a new gas reservation scheme requiring up to 25% for local market. Will the gas being used by NH3 be classified as domestic?
The very short answer is yes. So we are buying gas domestically. We are then using it as one of the inputs to provide clean energy. And effectively, if you look at our project, we're producing 1,800, or we will be producing, I should say, 1,800 tons a day of clean ammonia. To do that now, these are indicative numbers. I can't remember them all off the top of my head, but it's maybe 1,400 tons of water a day, 1,200 tons of gas, 1,000 tons of oxygen, and 1,200 tons of ammonia. So please don't take those numbers as specific, but the point is that gas is just one of 5 or so inputs that we need to manufacture our clean energy product.
The other thing I just wanted to add is because we are a Dom Gas customer, we will be buying our gas on a long-term fixed price plus indexing basis, which gives us a key advantage over our global rivals. That's particularly pertinent at the moment, that there's security of supply because we have long-term contracts, but secondly, there's actually price security because of the fixed price nature of our inputs.
Actually, I'm hoping this question is going to be asked, but just to jump on the back of what Charles said, there's a lot of discussion that we're having with our with various counterparties around the geopolitical situation and what that might mean. And when we're talking to potential off-takers, for the last couple of years, it's been very much their view that they want Australian ammonia as part of their supply portfolio because of the geographic proximity, the cost effectiveness, the low volatility pricing, and the geopolitical stability. And that has just been emphasized by recent events. There seems to be a growing sentiment of Asia Pac energy made in Asia Pac. And so there's also an interesting discussion we're having with several, which is at the moment, everybody's very short term on this. What is the US administration going to do tonight? What did they do last night? But as people seem to be increasingly realizing that, look, this looks like a much longer term. We don't know the specifics, but we do know the longer term picture has changed, and energy security and cleaner energy are both themes that are getting increasingly important, and that really plays to our advantage in terms of, part of Club Asia Pac.
Thanks, Stephen. There was actually a question on the geopolitical tensions impacting ammonia, so you probably covered that, unless you wanted to.
I think, well, I think there's more to say, and I'll be brief.
All
But
right.
I mean, as Steve says, I mean, it really has. This has been something which has been on the minds of our customers, and at a governmental level and at corporate level, ever since we've been engaged with them. I think this latest iteration of the conflict in the Gulf just highlights the fact, and as far as they see it, they're sitting on the edge of a volcano. Whether it happens to be erupting at the time or not erupting at the time, they're still sitting on the edge of a volcano, and they need to be able to manage their risk. I think one thing that this has highlighted is it's not just about energy security, it's also about food security, because obviously ammonia is one of the things which has been most impacted by the restrictions in terms of sailings from the Gulf. So it opens up a whole nother area of demand where the Asia Pacific countries are looking to secure supply. And really, in terms of ammonia supply, it's Australia or China. And China obviously is a BRICS nation, so it's not necessarily the country that you want to be having all of your supply coming from. Secondly, the vast majority, 75 to 85% of their ammonia is produced using coal, which has at least double the emissions of using gas for ammonia production. And there's no pathway to make those plants blue. You can't capture and sequester those volumes of CO2, and you don't have a natural home for the CO2 because you have coal mines rather than depleted gas fields. So it really has turbocharged the conversation in Asia. What it's also done is actually motivate inward inquiries from the Middle East in terms of investment, because at the moment their operations are essentially curtailed, and they are looking at risk mitigation as producers in terms of how they manage the dangers of the future as well.
All right, thank you. Look, there's quite a few questions, but there's been a few just around this, so I'm going to do those now while we're on it, and then we'll go back to the others. If the market was short ammonia overall once WAH2 is in production, could you sell NH3 into traditional markets, i.e., fertilizer, explosive, etc.?
Absolutely, ammonia is ammonia. We absolutely can feed into those markets.
Yep. And is there any risks around gas supply from Chevron given the Middle East issues? Is there a backup plan?
I mean, no, we are confident in our source of gas supply. as you rightly said, I mean, WA is a sort of an insulated market, if you like. It's not physically connected to the East Coast. It's not connected physically anywhere else. We have a lot of gas. Yes, a lot gets exported as LNG, but in WA, as you know, there's a domestic gas reservation policy. And so when we look at the volumes of gas still in the ground, the domestic gas reservation policy and the discussions that we've had with our suppliers, we are confident.
All right, I'm sort of going back up to the top now. The Australian market appears not to be recognising the value of this project. Has the board considered alternative monetisation options such as a US market listing or private pathways?
Um, yeah, I mean, obviously, we look at all sorts of ways to get value for our shareholders, get value recognition for the project. Um, I don't think a US listing, I mean, it's lots of people look at that because, it's a deeper market and so on and so forth. This is a bit of an Asia Pacific story, to be honest. And I think that even if people in Australia don't get it, people in Asia absolutely get it. So I don't think moving to North America necessarily serves us. Um, I mean, look, ultimately, this thing is going to find value because it's going to be cash flow generative and people are going to be able to do the maths more easily. The question is, in the meantime, is there a pull to fair valuation on the ASX? Do we become a target for takeover, whether it's corporate or a take private or whatever? Our focus today is to make sure that there is an understanding in the market that there isn't at the moment in terms of the scale of the opportunity of ammonia and the very enviable position which WAH2 holds in exploiting that market.
All right. Next, Woodside's Beaumont facility is expected to be producing blue ammonia from H2 2026, roughly 3.5 years ahead of WAH2. How does management assess first mover disadvantage, given the Beaumont and Blue Point may lock up Japanese offtake commitments before WAH2 reaches FID?
Um,
The-
do you want to take that, Steve? Sorry.
Well, I'll say a couple of things to begin with.
Yep.
I mean, this is an extremely substantial emerging market.
Yeah.
So I mean, without being trite, there is plenty of room for projects in the Gulf Coast, projects in the Middle East, and projects in Australia. If you look at, because remember, we're not just talking about power generation in Japan and Korea. We're talking about global shipping decarbonisation, and that's not talking about potential expansion into fertilizers and agri and so forth. So we do. You can actually look at it two ways. So big picture, there's a huge market, so we're not worried. We also think it's good for market development to have different sources of supply. Having said that, we're very pleased to be the first mover in Australia because we do think that that is going to offer us significant opportunity.
I'd just add to that and say that I think that Europe is going to be the biggest customer for the US producers.
Yeah.
Especially with the situation in the Gulf and obviously the situation with Russia, they are going to be looking to the US for energy supply. It's unequivocal. So that's point number one. As Steve says, this is a huge growth market. A 36% CAGR. And so there's going to be plenty of room for everyone. And in terms of Steve's point about, we're the first mover in Australia, we're the only mover in Australia at the moment. We're so far ahead of the competition. So we're in a great place for phase one and phase two and phase three of this project to try and keep up with the demand that's emerging in the region.
And maybe just to sort of share another fact, as it were, we've got a significant shipping advantage compared to the US to Asia Pac. And so if you take Japan as an example, the cost of shipping ammonia from the US Gulf Coast is about 3 times the cost of shipping ammonia from WAH2.
Stephen, just on the shipping, there's a question about the IMO and that decision. Is that there sounds like there's some positive things sort of in the background going on. Can you just provide any commentary on that, either of you?
Do you want me to take
Yeah,
that on,
yeah,
actually?
you start this one if you like.
Something which I follow closely. There does seem to be a lot of progress in terms of the getting everybody on the same side of the table for that. One of the issues which caused objections last year was essentially there was a lot more stick than carrot. So, in other words, there was a lot more tax revenue than there was subsidy. And so it would result in a large revenue inflow for the UN without any clarity about how that money was going to be spent or who was going to actually be responsible for making those spending decisions. And that was one of the biggest objection points against the scheme last October. That now seems to be being addressed, and essentially it's being formulated so it's a lot more revenue neutral, so that for every amount of money which is raised for people who are heavy emitters, there is a much larger subsidy component for people who are reducing their emissions significantly. And so that was one of the big binds last time around, and seems to be getting sorted out.
All right. Look, I'll try and I don't know if we're going to get to them all. I'm just conscious of time, so I'll try and do a few more and see how we go. How sensitive is the project IRR to a $100 per ton move in realized price?
If you actually look in our deck, and we can bring it up, we have a number of tornado diagrams or tornado charts, which actually show sensitivities to gas input price, ammonia sales price, interest rates, capex, FX, all the rest of it. So for being able to look at delta sensitivities, there's information there. So I would direct people to that.
All right. Is the Angel CCS proceeding at speed? And what is this certainty that Angel will take your carbon? Is there a backup plan?
We So yes is the short answer. As we've consistently said, one of the advantages of our site is that we have two CCS options. We're effectively equidistant between the Woodside-operated Angel CCS project and the Santos-operated Reindeer project. We are in confidential discussions with each of those providers. All we have announced, and we've said that publicly, we do have an MOU with the Angel, but it's not exclusive, and that was clear when we announced it. So we're comfortable with the CCS process, and we're very comfortable having that competitive tension in terms of service providers.
All right. What specific milestones need to be achieved in the next 6 to 9 months to keep FID on the original timeline? And what is the realistic fallback date if any of these slip?
Well, I think that the chart that we've got up at the moment illustrates what the milestones are to FID. Sorry, the one that we were on there. At the moment, we're pretty happy that the way things have tracked. You never know until you know. But I was talking to a banker on the financing side yesterday who had been involved in Perdaman, and he said, "You guys have achieved in 2 years what it took Perdaman 9." So we have an amazing team. I'm very proud of the team that work at NH3. They are extremely experienced, and as Stephen says, we have brought in the best of breed of every single interface and work stream that we've got, whether it's internal or external. So yeah, we're very proud of the way that we've tracked against our guidance.
Right, I think I'll finish up with a final sort of question that's trying to put a little bit together here. Obviously, you've sort of talked about the share price and probably not correlating the progress and the valuation. Can you sort of talk about what you think we can maybe do as a company to get more coverage, get more institutional buying? That's probably the all of those questions put together.
Yeah, sure. I mean, we spend, well, I spend an awful lot of time engaging with investors, and hopefully investors feel that I'm always there to answer questions and try and provide as much color as we possibly can. And so I think that the investors that we have are fairly are well educated in the project. I think we do need to expand the audience. The challenge on, I mean, we've got the instos that we've got on the register are fantastic. We couldn't ask for higher quality names. We do need more instos. And obviously, institutional fund managers have restrictions around what they can or cannot invest in. And so we are still a 100 million market cap company. So I think that is a major impediment to the breadth of institutions that we can address. It's one of those catch-22s, I'm afraid, but we are engaged with enough investors who can buy into the company that I hope it's in the very near term that we will break that glass ceiling, and then I would expect to see an acceleration in terms of revaluation and understanding about what the potential of the project is.
All right, thank you. Thanks again to everyone who joined us today, and thanks to Charles and Stephen for the presentation. Charles, I'll just turn back to you for a final comment, and then I'll hit close on this.
For sure. Well, it's been a long webinar, so I won't take too much time. But just to reiterate, we are a very open management team. So please do reach out to myself or to Steve if you have follow-up questions. We do try and do regular videos that we post on our LinkedIn to give updates both in terms of the macro and the project itself. I hope you get to see some of those and find them useful. But in the meantime, I wish you all, happy Easter and holidays. I'm sure a lot of you have got, kids home from school and so on. So I hope everybody enjoys their time together, and we look forward to keeping you updated with the continuing progress of the project.
Thank you.